Another escalation in the trade dispute between China and Canada. This morning, China announced a preliminary anti-dumping duty on Canadian canola imports.
Effectively, China is saying we don't want Canadian canola anymore.
China is taking aim at Canadian canola farmers. Beijing's new tariff on exports of raw canola from Canada at a rate of nearly 76% are now in place.
Canada shocks China, turns 75.8% Canola Tariff into a big victory. When China slapped a massive 75.8% tariff on Canadian canola, many thought it was the end of one of Canada's most valuable industries.
Now we're calling on the federal government to take immediate action to help canola growers during this unprecedented situation. The Chinese government has clearly launched the tariffs at this time of year to cause maximum impact and maximum uncertainty.
Overnight, billions in trade vanished, farmers faced ruin, and markets braced for collapse. But what looked like a disaster quickly turned into one of the most surprising comebacks in global trade. Instead of folding, Canada adapted, rebuilt, and turned the tariff into a launchpad for something far bigger.
The ambassador to Canada saying canola tariffs will be dropped if Canada drops its tariffs on Chinese-made electric vehicles.
The move meant to cripple Canada instead backfired, transforming its canola industry and leaving China facing unexpected consequences. Here's how Canada turned crisis into victory. When China dropped the hammer with a 75.8% anti-dumping tariff on Canadian canola, it sent shockwaves across the prairies. For years, China had been one of Canada's top buyers, importing nearly $5 billion worth of canola in 2024 alone. Overnight, that market was gone. Farmers who depended on those exports suddenly found themselves staring at massive losses. Processors were left scrambling, and global canola prices began to sink. To outsiders, it looked like a knockout blow, but this wasn't just about crops or farming, it was about politics. Canada had recently joined the US and Europe in hitting back at China's growing economic dominance, slapping 100% tariffs on Chinese electric vehicles. Beijing's retaliation came fast, and canola became the target. On paper, it was the perfect move. By crippling one of Canada's most valuable exports, China thought it could pressure Ottawa into backing down. Yet there was one problem with this strategy. Canada wasn't as vulnerable as Beijing believed. The country's agricultural sector had been through trade wars before, from past disputes over beef and wheat to bans on other commodities. Canadian farmers knew how to adapt quickly, and the government had already built safety nets designed for moments like this. The tariff that was supposed to bring Canada to its knees instead set the stage for a remarkable turnaround. What looked like a crushing defeat was about to become a story of resilience and reinvention. But here's the twist. While China expected Canada to cave, what happened next would completely flip the balance of power in global agriculture. Instead of folding under pressure, Canada came out swinging. Within days of China's announcement, Ottawa rolled out a package of emergency measures to keep farmers afloat. The government introduced price insurance programs, reserve funds, and direct financial support, sending a clear signal: Canadian farmers would not be left stranded. The message was simple: this industry was too important to fail. But the real surprise wasn't government aid, it was how fast Canada's private sector moved. Farmers, traders, and export associations immediately began looking beyond China. Their target: new markets. Hungry for canola, the European Union, Japan, South Korea, and several Southeast Asian countries quickly stepped in to fill the gap. Incredibly, within just one quarter, Canada's exports to these regions surged 20 to 30%. What was meant to be a devastating blow turned into a chance to diversify and reduce dependency on a single buyer. And here's where it gets even more interesting. Canada didn't just find new customers, it built stronger trade relationships. European buyers, in particular, valued Canada's reputation for high-quality, GMO-free canola. In Asia, growing demand for healthier oils and renewable biofuels made Canadian canola more attractive than ever. This pivot also shifted the balance of power. By proving it could thrive without Beijing, Canada showed that China wasn't the only game in town. The shock of losing one major buyer forced Canada to secure many others, making its future trade position more resilient than before. In other words, what China saw as punishment became Canada's Canada's opportunity. The tariff that was supposed to weaken Canada ended up making its canola industry stronger, more diverse, and less dependent than ever. But Canada wasn't just exporting more canola, it was transforming what canola itself could be, and that's where the real victory begins. Diversification was just the first step. Canada quickly realized that if it wanted to future-proof its canola industry, it couldn't rely only on bulk exports. Instead, it began reinventing what canola could be. Traditionally, canola was sold as raw seed, a commodity with slim profit margins and heavy dependence on foreign buyers. But the tariff shock pushed Canada to speed up its investments in value-added processing. That meant turning raw canola into high-profit products like refined vegetable oils, plant-based proteins, and even bio-based ingredients for clean energy. Industry leaders saw this as a turning point. One executive put it simply, "We're not just exporting seeds anymore, we're exporting solutions for food and energy security." By moving up the value chain, Canada positioned itself not just as a crop supplier, but as a strategic partner in multiple industries. The impact was immediate. Global food companies started seeking Canadian oils for health-conscious markets. At the same time, energy firms showed growing interest in canola as a feedstock for renewable biofuels. What once seemed like an agricultural crisis was now opening doors into entirely new markets worth billions. And here's the genius of this shift. It gave Canada bargaining power. Instead of being stuck as a raw supplier vulnerable to tariffs, Canada became an exporter of specialized, high-value goods. That makes it harder for countries to simply cut Canada off, because they would also be losing access to products essential for food, health, and clean energy. This reinvention didn't just shield Canada from China's pressure, it elevated the entire industry to a global stage. What started as a survival move turned into a blueprint for long-term competitiveness. But while Canada was leveling up its canola game, China itself began to feel the sting of its own tariff, and the consequences were far from what Beijing had expected. When Beijing slapped a 75.8% tariff on Canadian canola, it was supposed to be a show of strength, but in reality, it created a chain reaction that hurt China more than anyone expected. By cutting off affordable Canadian supply, Beijing forced its own food processors and biofuel companies to pay much higher prices for alternative imports. That meant rising costs for cooking oils, livestock feed, and renewable energy projects inside China. In other words, the tariff backfired. Instead of weakening Canada, it pushed up China's domestic costs at a time when its economy was already under pressure from slowing growth and strained international relations. For Chinese companies, replacing Canadian canola wasn't easy. Few countries could match Canada's scale, quality, and reliability. Meanwhile, Canada was thriving. Farmers who once feared losing their biggest buyer were now selling to multiple markets, often at better margins. Export diversification reduced Canada's vulnerability, while value-added processing made its canola products harder to replace. The very move that was supposed to cripple Canada had in fact made it more powerful in global trade. And here's the irony, China ended up proving Canada's point. Tariffs and protectionism may work in the short term, but in the long run, they expose weaknesses. While Beijing struggled with higher costs, Canada showed the world that adaptability, innovation, and strategic partnerships are stronger than any trade weapon. Analysts now argue that this clash may go down as a textbook example of economic miscalculation. Instead of pushing Canada into submission, China unintentionally helped it build a more resilient, future-ready industry. So what's the bigger picture here? The lesson isn't just about canola, it's about the hidden power of turning setbacks into strategy. China thought it had dealt Canada a crushing blow with a 75.8% tariff, but instead, Canada turned the tables. By securing new markets, investing in value-added industries, and proving its adaptability, Canada transformed a short-term crisis into a long-term advantage. The lesson is clear. In global trade, raw power doesn't always decide the winner. Resilience and strategy do. Canada didn't just survive, it came out stronger, showing that the real strength lies in turning pressure into progress. And this time, it wasn't China that shocked the world, it was Canada.